Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for the end of the month, and this is July 31st, Tuesday, 2018, just after 4:35 p.m. Central Daylight Time. An up day in the metal markets, and in part largely because China and the U.S., the lower level, let's call it negotiators, are trying to set up a framework to get the teams back together and talk trade. The idea of laying out a framework is not the same as having a trade deal. The market certainly went crazy on it, and the market was much higher than this, by the way. Stock market's on the close at the end of trading. Let me say at the end of trading. These are the closes at 3:15. Apple's earnings came out at 3:30, and that kicked the market. Dollar index up on the news, British pound down a little bit, but the yen is the story because the Bank of Japan elected to basically just hold the same path that they have. Disappointing a lot of traders, kicking the dollar up, but even with that, the metals were able to stay up. When we look at gold, a weekly chart of just closes, you're only up 70 cents. It's not like the market has taken off or done anything, but it's off the lows. We can see that the market today made another probe for these lows here. Now here's the interesting part. When we put in price counts, this was our third price count area. Areas are what price count's about. If you think about Fibonacci numbers, you get certain counts out of them. The market's made of 38%, 50%, goes on, 62%. Well, and I'm talking corrections up or down. In price counts, you get a pattern that's way back up here, and from that pattern, you get counts to the downside. That doesn't mean it can't go to a fourth count, but it's very rare to see that. You need a real bearish event to set that off. So we think that the market today is an important day in the outside day up. That being, this low should not be taken out again if today's reversal up has any meaning and if the market's going to get away from these price counts. The market, because of the action today, has a higher high than yesterday and certainly a lower low. It takes it out of the pattern of lower highs and lower lows. The resistance level, the first resistance, is the 18-day average of closes at 1245.20. The support has been hit back here in the lower Bollinger Band. The stab today under the most recent lows and no follow-through to it likely means it's not going to be hit at this point in time, and momentum is trying to turn up. So in a nutshell, I put the bear phase minimum on pause. Will this turn into something bigger? I don't know. Certainly not there in the chart action, but the bear phase is over. When we come to the gold ETF GLD, you still have a pattern of lower highs, actually the lower low. Now I'm making this point up, why? Because this high took out the one here. So similar to the gold futures, you have your outside day up, and you took out, in this case, this high. This one had to take out the high of 2 days ago. That's why I'm making note of it for you. But the market is now trying to turn momentum back to the upside with the K line, the red number, over the blue number of 2047. When we come to the gold miners, no, they're still the laggard, and they still have the embedded reading. This is bearish action. This is not bullish. Could it bounce with everything if gold rallies? Sure. But I hate when one of these, and I hate when the miners aren't leading the market to the upside. If they're staying bearish, I'm always very concerned. So a bounce in the metals, maybe. I want to thank one of you. You wrote me and said that our gold, I had 16 in there. I don't know how that happened. No idea that it wasn't moving. The reality is the market has fallen back anyways to the 18-day average of closes, and the peak of the gold-silver ratio, the current peak, was around 79.5. It's lost a little, but this is where the market has to decide, is it going to get under that number and do anything about it like it did back here? You're at a key number on that, but I do appreciate the help. I did not see that. In the September silver, the daily bar chart, you've got a pattern of higher lows and an outside day up, by the way. Target could be the 18-day average. I think it is because of momentum. It doesn't mean it'll be hit, but I know that's the target on it. And if you exceed all these 18-day averages, do you put the upper Bollinger Bands into play? That'll be a question that I start asking on a regular basis. In the copper market, as I told you when the market did this. Remember we were like this and I said, watch out, the bear phase is over. Well, that's what I'm basically saying in gold. We've left the bear phase. This market went to the 18-day average, fought around that number, and when it got today, the good piece of news, it came back up, and that news being China's talking to the U.S. Are we overbought? We are. Is the market starting to develop sideways instead of this channel down in both the Bollinger Band and price action? Absolutely. Resistance could come in at 286.60. Copper's obviously paid no attention to any bullish news up until just recently with the strikes in Chile and so on that are going on. Interesting time in it, but market, I would say, back in an uptrend unless you take out 275 again. In the platinum, you didn't quite get over this rally high here. If it does, it negates the downtrend. You are overbought as can be, sideways action, 861.60 resistance, support back at 838.10. In the Palladium, today's high was 929.50, did not take out the 932.30. The market's got a pattern of higher lows and lower highs. So prices are narrowing in just like that now. Get ready for another move. Let's assume that the market breaks out to the upside by getting over 932.30. 955.60 to 961.70 is the resistance area. If prices get under 910, then you put back into play the potential for the lower Bollinger Band again. Keep in mind you are overbought. In the dollar index, just drifting sideways. Tomorrow we get the FOMC announcement. I doubt that they're going to do anything in that. Doesn't mean I'm right. We'll all wait to see in terms of the announcement. There's no press conference. No interest hike is expected. And wording changes from the last FOMC meeting. That is what everybody will focus on. Do they change a few words? What do they do? And how will that impact the market? So you put that all together, an interesting time. I want to remind you that I offer my own research. Now, what I do with my research, I hope you enjoy it. It starts off in the morning at 8:30. I record 40 charts live as the market is trading. I'm not in that one. I'm sitting at my desk, got a whole headset, a professional recording area in there, and I'm recording for you and talking about the markets, going through the charts that look just like this. From there, I'm throwing out trade ideas for the day as I'm seeing them, the what-if scenarios, if there's a fundamentals, because by that time I already have a lot of the morning reports telling you what to expect, recapping from overnight. And then 11:30, I write a report about what to expect, what has happened, and what to expect going forward for the rest of the day. From there, I bring you up to date in the evening again with another written commentary, and that one comes out by 8 o'clock at night typically, and there I'm preparing you for the next day's trade. As an example, we had the API numbers come out today late in the day. Bearish as can be on the crude complex. We'll see what happens. EIA comes out first thing in the morning. Then we get all kinds of other reports tomorrow, and I give you what the trade is looking for. I'm surfing the internet looking for all that and putting it in one space for you. How do you get a trial to it? Give us a call here. How do you purchase it? Go to our website. Go to www.iraepstein.com. You can read about how it all works, where it's at, but you do get a free trial if you haven't had one, or you can click up here. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.